Good evening, everyone. My name is Jerry D'Ambrosio, and welcome to this week's special presentation. Today's hottest industries can be found at the top of the VectorVest Industry Viewer. We analyze industry groups and sectors in the same manner as individual stocks. Not only can you apply VectorVest's indicators to find today's fastest rising industries, but also those that have been persistently rising in the long term. I'm going to move us from the home page into the Industry Viewer, so I'm going to click on Viewers at the top. Move over and select Industry Viewer. The default sort here in the Industry Viewer is RT, Relative Timing. Relative Timing is an indicator that measures the short-term price trend and momentum of an underlying equity, an industry group, or sector, or even the market. So when you sort by RT, it's on a 0 to 2 scale. Above 1 is good, below 1 is bad. The higher above 1, the better. When you sort by RT, it brings the fastest rising, hottest industry groups to the top of the list. So right now we can see retail, mail order direct, retail apparel. It is Christmas season, right? So you have a few retail industries up at the top of the list. Machinery, construction, mining, a few building industries, leisure, and so on. So these are the hottest industries right now. So what you'd want to do here, look at the charts of these industry groups. I'm going to select Graph All at the top. And here we're looking at a 1-year graph of retail mail order direct with RT at the bottom and the industry group price action here at the top. So overall, not bad, right? Bottom left to upper right, you could see RT well above 1, crossed above 1 here back at the beginning of November, and overall, pretty good price pattern. You could see the industry group had a really tough time here at the end of this summer, also into the fall. I'm going to click on this area here, right below the scroll dot to go to the next industry group. Now retail apparel, again, even though it's a hot industry group right now, you could see retail in general has struggled quite a bit over the last year or so. And it's apparent right here by looking at this industry graph. Now again, it's hot right now. RT crossed above 1 back here in October, end of September, and has been moving up nicely here over the last few months. Really rough start to the year though. Machinery, construction, mining is fantastic. RT first crossed above 1 back here in April, and the industry group has been steadily rising, not a lot of volatility since then. And that's really what you're looking for. Sure, finding hot industries right now is important, but I want to find industry groups that perform well in every season, not just the winter months or the summer months, but that consistently perform well all year long. This one looks pretty good. Building, residential, commercial. Wow, look at this industry group. The RT practically remained above 1 the entire year. What a smooth, steady rise in the industry group. This is the ideal situation. And this is what I'm going to show you here in a moment, how to find these types of industry groups. Building, mobile. Again, it's really hot right now. Had a really rough start to the year. Not ideal. So this is the ideal pattern that we're going to be looking for here with industry groups. Bottom left to upper right, not a lot of volatility at all. So I could just continue to scroll down and just get a sense of what we're looking at. Leisure, hotels, motels, not bad at all. Media, books, looks great. Wow, media, newspapers. Now this is not the ideal chart pattern, right? Even though it's been moving up nicely here in the short term over the last quarter or so, had a really rough start to the year. So we're just getting a sense of the ideal pattern that we're going to be looking for here when we analyze industry groups. I'm going to close this. VectorVest has an indicator that helps us identify persistently rising price patterns. It's called Comfort Index, or CI. You could see that indicator right here in the spreadsheet. CI measures a stock or an industry group's ability to withstand lengthy downturns. They exhibit exceptional price growth persistence over the long term. Now, retail, mail order direct, retail apparel, especially retail apparel, right? We didn't like that chart. Look at the Comfort Index at 0.58. On a 0 to 2 scale, we know that's unfavorable. So what we're going to do is we're going to favor industry groups with high RT ratings, meaning that they're rising right now in the short term, and also high CI ratings as well. The higher the better, meaning that they've been persistently rising over the long term. So long-term uptrends, short-term uptrends, we're going to combine both of those together to find some really solid industry groups. So what I'm going to do is I'm going to combine those indicators into a custom sort. So as you can see, the industry viewer is sorted by RT, just simply RT. I'm going to click on that, and I'm going to change the sort to RT times CI. We're going to combine both of those indicators. We want to rank the industry viewer based on the best combination of relative timing and comfort index. I'm going to click on that. We're going to sort descending, and I'm going to click on OK. And it actually gives you the column here, the RT times CI column. Healthcare HMO is the industry group with the best combination of relative timing and comfort index. You can see both are above 1. You can see all of these industry groups have both RTs above 1 and comfort indexes above 1 as well. Machinery, construction, mining. Remember, we saw that industry group a few minutes ago. Building, residential, commercial as well. You also have a lot of ETF industry groups at the top of the list as well, and I'm going to get into those here in a moment. So let me click on Graph All. We're going to look at the charts, of course. And there you go, Healthcare HMO. And I'm going to come up to the top here, click on Add Parameter, go to Capital Appreciation, and select Comfort Index. You can plot Comfort Index on the chart as well. And I'm also going to check and add value to the chart. I'm going to take off the last close, that horizontal orange line across the top. So this is the ideal, picture-perfect chart pattern when analyzing industry groups for consistent performance, not only short-term performance. It's an undervalued industry group, right? The RT has practically been above 1 the entire year. Look at when CI, too, first crossed above 1 back here in the beginning of May. CI has steadily climbed. The industry group has persistently increased in value. I'm going to move to the next one. Machinery, construction, mining. Now this industry group is a little bit overvalued, and that's not necessarily going to deter me away from participating in this industry group, but it's just a nice piece of analysis to have. And you can see price and value are very, very close together here on a current basis. RT's above 1. Man, look at this. I have to go all the way back to 2016 to see when the CI indicator first crossed above 1. You could see it first crossed above 1 here. RT was already above 1. And the industry average price was right around $55, currently at $86. So obviously that would have been a nice opportunity to take part and participate in this industry group. Move on to the next one. Here, same thing. Building, residential, commercial. I mean, that's an ideal price pattern right here over the last year. RT's above 1. We could see that the comfort index, we'll look at it here, right? In May, when the CI crossed above 1, it's remained above 1 the entire time. This is also an undervalued industry group. You could see value all the way up here, right around 231. Industry average price is 179. So beautiful looking chart here as well. Now we're starting to get into some ETFs. And this particular industry group is looking at technology ETFs. I have to scroll back here as well to find when the CI first crossed above 1. You could see RT was above 1 at that point. Average industry price was 56. Currently, average industry price is about $79. So back here when CI first crosses above 1, RT's above 1. You could see that the industry group is rising. Excellent opportunity to participate in some technology ETFs. So I'm going to close out of these charts. What we'll want to do from here is take a look at the stocks within those industry groups. And to do that, all you need to do is double click on the industry group itself. So healthcare HMO, if I double click, it'll open up all the stocks within that industry group. And here we're only looking at 10. We can sort the stocks within the healthcare HMO industry group by the same indicator, RT times CI. So I'm going to come up to the top, change the sort to RT times CI, and click OK. Now with only 10 stocks, the sort may not make much of a difference. When you're looking at an industry group with 50 or 100 stocks, the sort absolutely makes all the difference in the world. But let's analyze the stocks now. So now we're looking at stocks that have the best combination of RT times CI, short-term price trend, long-term persistent growth in industry groups that are exhibiting the same characteristics, right? Industry groups that have short-term favorable price performance, but also persistent growth over the long term as well. And let's analyze them. You can see CNC at the top of the list. Price of 102.59, value of 139.34. Very good. RV 1.49, excellent. Look at the RS 1.45, also excellent. Is the stock rising or falling in price right now? It's rising. It's got a 1.36 RT. Look at that comfort index, 1.7. If I click on Graph All, here's the chart now for CNC. We know it's undervalued. I'm going to take value off. Look at that chart pattern. Bottom left to upper right. This is the type of price behavior that you would expect when looking at a CI of 1.7. RT has remained above 1 the entire year. And look at this. When CI first crossed above 1 back in July of this year. I'll move on to the next stock. ANTM, very similar price behavior. AET, UNH, CI. Fantastic looking chart patterns. And again, with those high CI ratings, that's what you would expect. Now GTS, let's take a look. GTS is at the bottom. It's got a CI of 0.95, so it is unfavorable. It's below 1. It's the riskiest stock in the list as well. It's got an RS of 0.99. Let's take a look at that chart. I'm going to right click, view the stock graph, and no surprise that this is the type of price behavior that we see here over the last 1 year. Not smooth and steady. Pretty volatile and extremely unpredictable. I'm going to close out of that. So what you can do here is cherry pick the top couple of stocks from each of the industry groups. I would take the top 2, put them in a watch list. I'm going to right click, add them to a watch list. You could put it in the My Watch List folder. I'm going to select that and select New Watch List. And I'm going to call this Industry Leaders. I always like to give my watch list the date as well, just so I know when I created it. So today is 12/22/2017. Click on Add, and then click on OK. I'll close out of the stocks within the healthcare HMO industry group, go back to the industry viewer, and next on the list is machinery, construction, mining. We know what this chart looks like. If I right-click on it, view the industry graph, look at that, beautiful bottom left to upper right. We saw this one earlier when the CI first crossed above 1 back in September. And in just a little bit, I'm going to show you folks how you can find industry groups whose comfort indexes have just crossed above 1. We can do that in the Unisearch tool, and I'm going to show you that in a little bit. So we know what the industry price graph looks like. We want to double click. Now we only have 3 stocks in this industry group. Look at the RTs, look at the CIs. So right away I know Caterpillar and TEX are the 2 stocks that I would favor in this list. Both have RTs above 1, both have comfort indexes above 1. So I'd right click on them, I'd select them both, right click, and I'm going to add them to our same watch list. So we're building a nice hit list of hot stocks in hot industry groups. Let me close out of that and go back into the industry viewer. Third in the list, building residential commercial. Double click on that one. All right, now we have 24 stocks in here, so I think the sort is really going to come into play. So instead of VST, I'm going to change that sort to RT times CI. And let's analyze from the top down. LGI Homes, price of 73.83, value of 97. That's good. Good RV, good RS. Look at that RT rating, 1.76, and the CI 1.74. Fantastic. Earnings growth rate at 19% as well. Let's graph them. Absolutely. Look at when the CI first crossed above 1 here. And if you're picking up on that, folks, I'm pointing out when the CI first crosses above 1. Not to say that you're late to the party here. The stock is exhibiting tremendous growth here in the short term as well as the long term. But keep your eye out for stocks that are fundamentally sound. And let me minimize this again. We know this company is fundamentally sound. It's undervalued. It's got favorable RV, RS ratings, and GRT. Keep your eye out for companies like that when their CIs first cross above 1. I'm going to go down to the list. We have to scroll all the way back here. Here's KB Homes to when CI first crossed above 1. Beautiful looking chart pattern. RT is above 1. And just keep scrolling down the list. Now, DR Horton, let's go to a 1-year chart. looks pretty good. Here's when CI first crossed above 1 as well. So scroll down the list, folks, but I would just stick with the top. You know, if you like one, Pulte Homes, for example, or Lennar, more so than the ones at the very top, go right ahead and put them into a watch list. But to keep things simple, I'm going to follow the power of the sort here with RT times CI and just take the ones at the top of the list. You really can't go wrong with either. So you take a few of the top stocks from this industry group and you put them into that watch list as well. I'm going to close out of this, and then finally I'm going to talk a little bit about ETFs. Notice the next industry group here is ETF sector technology. Now, we don't assign a value necessarily. You can see that the value of the industry group is exactly the same as the price. We don't assign an RV or an RS. They're both at 1. I guess we do assign a value, but they're always going to be at 1. We're not too concerned with the fundamentals of the underlying stocks within the ETF itself. And in this case, all of the ETFs that we're going to be looking at track technology stocks. We're more so focused on the RT, relative timing. It's at 1.14, so we know the industry group is in an uptrend. And look at the CI rating at 1.45 as well. If I double click on it, now we have 36 ETFs that track technology stocks. Now, they're different. Some are semiconductors, some are just tech stocks. You have different spaces, if you will, within this industry group. And I'm going to sort this industry group similarly, okay? Instead of just RT times CI, I'm going to add average volume to the sort itself. Volume is extremely important when trading ETFs. You want to make sure that there is some liquidity there, because if I scroll over, notice a few of the industry groups at the top of this list are rather thinly traded, right? They're not actively traded here. IGM, 42,000 shares on average. TDIV, 72,000 shares on average. So I'm going to add the average volume to our RT times CI sort. But in this instance, I have to actually create that custom sort. It's not a sort that's already in the VectorVest program. So let me minimize this, and I'm going to show you how to do that. I'm going to click on Tools, go to Custom Field Builder, click on Fields at the bottom left, go to Capital Appreciation, select RT. I'm going to multiply RT times Comfort Index, and I'm going to multiply that by average volume. So I'm just looking for the stocks with the best combination of RT, CI, and average volume. Click on Validate, make sure the expression is valid. It says it is validated successfully. Click OK, and click on Save Changes to make sure that the changes that you made are saved successfully. Click OK, and click Exit. Now I'm going to bring up our list of ETFs, and I'm going to apply that sort. RT times CI times average volume. Select OK. And don't worry so much about the number here at the top. Just know that the ETFs at the top of the list have the best combination of RT times CI times average volume. And we can take a look. Look at the RTs, all above 1. Look at the comfort indexes of these ETFs, all above 1. And they're very actively traded. These are the highest average volume ETFs in the list. So again, volume is very important when trading ETFs. So you would look at the charts here as well. Click on Graph All. And again, here I have to go all the way back to 2016 to see when the comfort index first crossed above 1. Here's XLK. It's a technology ETF. Just scroll through, look at the charts. You're going to love what you see here, folks, when looking at 1 year and even longer for each of these ETFs. Now, if you're curious to know what Spider Trust SBI actually tracks, you can right-click on it, view the full stock analysis report, and scroll down to the business description. It says Sector Spider Trust SBI Interest, formerly Technology Select Sector SPDR Fund, seeks to provide investment results that correspond to the price and yield performance of the Technology Select Sector of the S&P 500 Index. So that's specifically what this ETF is tracking. And again, just right-click and view the full stock analysis report to see exactly what it tracks. So what I would do is I would take the top two. Now this one again is the select technology industry. The second one is a semiconductor. So different spaces there. I'm going to right click and I'm going to add those to our watch list. Okay, and let's go review that watch list here quick. Here it is. So looking at the average, and that's the first thing I always like to do when analyzing a watch list. Let's look at the average. The average price of 99, average value of 115. Remember, the two ETFs that we selected don't really have a value. They're always going to be the same as the price. But the average RV is favorable, 1.26. Average RS is good at 1.13. More importantly, the average stock is rising in price, 1.39. VST of 1.28, which is good. And the CI 1.6, which is excellent on a 0 to 2 scale. 7 of the 8 stocks in here have buy ratings, and the numbers look great across the board. All of the growth rates here on the equities, on the stocks that we're looking at, are in double digits. And always make sure that you're trading these types of stocks, folks, in a rising market. Now, of course, we're in a rising market now, so these might be a few stocks that you put on your radar. You don't get much better than this when you're looking at undervalued stocks, outstanding upside potential, safe investments in uptrends, and that have been persistently rising over the long term as well. I mean, that's a perfect recipe for a successful investment. And the last thing I'm going to do here quick is I mentioned earlier on that industry graph when we were looking at Comfort Index and how you want to keep your eyes out for industry groups whose CIs first cross above 1. I'm going to go back to the industry viewer. Let's take one for example. Let's take healthcare HMO. I'm going to right click on it. We're going to view the industry graph. And you're looking at the chart, and when you look at a chart, folks, it's essentially a back test because you want to see, okay, when did CI first cross above 1? Well, it did so on May 10th. And you say, man, that would have been a great opportunity to start buying some healthcare equities, right? Healthcare stocks. So let's see if we would have been able to find this industry group on May 10th with a little search that I'm about to create. So let me close this. I'm going to go into Unisearch. And stay with me here, folks. I'll explain this as I'm going. But in the date time box, I'm going to say 1 week ago. So 1 week ago, I want to find industries whose comfort index was less than 1. Okay? But the time that I run the search, I want to find industries whose CI ratings were greater than 1. Everybody with me there? 1 week ago, the comfort index on the industry group was below 1, but the time I run the search, the industry group CI was above 1. And again, if we go back to that chart, we can see that that happened on May 10th. I'm going to change the date up at the top to May 10th of this year. And this is important. I'm going to return industries. I don't want to return stocks. I want to return industries. And I'm just going to change the sort, the secondary sort, to comfort index. Not really going to come into play, but I'm just going to change the secondary sort to comfort index. Run it, and look at what's at the top of the list. Healthcare HMO. So on May 10th, we saw that on the chart, the CI rating first crossed above 1. Let's take a look at some of the industry groups. Again, the date is May 10th. I'm going to graph them all, and I'm going to create my date line right on May 10th. So we know healthcare HMO would have been an outstanding industry group to participate in at that point in time. And we found it with that scan on that day. Let's take a look at the next one. Building painting products. You can see how the CI first crossed above 1. It wasn't above 1 a week ago. It was above 1 on May 10th. And that was at an average price of 115, and it's now at 135. The CI score has remained above 1 ever since. Software financial. Comfort index first crossed above 1. This is a little bit more of a volatile industry group, and price behavior didn't follow along like we would have hoped it would. Next one. Wow, personal soap and cleaning. Look at the CI, how it first crossed above 1. You got lucky here for sure, and if you would have had some of the stocks within this industry group, you would have made a killing here when the industry there gapped up. Another good one, transportation air freight. There's where the CI first crossed above 1. Took a little while to get going, but you can see the industry group continued to rise. Transportation airlines, you had a little opportunity here in the short term. You could see that the CI crossed above 1 on May 10th, continued to rise there for a little bit. Building, residential, commercial, we saw this one earlier as well. This is ideal. And look at the price action here, price behavior coming in to the crossover when the CI first crossed above 1. All right, I'm going to close that. So this search, guys, this scan is not in your program, so you can build it yourself, and you can also save it as well. And to do that, you click on this little button here, click on Save, Save As. You can call this Industry CI Crossover. You could put it in the My Long Searches folder, and make sure you select long, because it is a bullish type of a search. Click on OK, and very important here, when you run this scan, make sure you're returning industries and not stocks. All right, folks, well, this concludes tonight's special presentation. I hope you enjoyed it. Don't forget, tune in on Tuesday of next week at 3:30 Eastern Time for a Q&A devoted to this week's special presentation. I hope you all have a fantastic holiday weekend. Take care, folks.